Hey traders, Nick Shaheen here looking at Canopy growth, maybe some other pot stocks too, but I was covering these for the last 3 or 4 weeks, more frequently than last week, kind of like fell off the wagon a little bit. I don't trade them as much as I cover them for friends who are trading them more actively than I am. So CGC seems to be like the stock to have because of the perceived, I say perceived because I don't really know what they did off balance sheet, off books balance sheet stuff, but on paper they should have a stronger balance sheet than a lot of the other ones. So I will start there and we'll go from, so every video I did, I probably drew lines, and every line I draw, I leave until it becomes obsolete. So in this case, there was an ascending trend here that was, I said, if lost, would come down to about here, my eyeball, and I'll tell you why here in a second. Here being 1861. By the way, I got a feedback over the weekend, which was pretty cool, is somebody that listens to these videos while they're driving, and when I say here, they don't know what I'm talking about, so I'm going to put a number next to it, 1860-ish. And then subsequent video, I drew the white line, and I believe I tweeted out an alert saying, be careful if you're long CGC at one of these ticks. I'm not sure which one, but it did spring a caution alert. So here it is, down to almost the white line that I drew. And again, the zones I draw are based on what happens prior. So technically I might be incorrect by extending the measured move or estimating the target from a technical perspective. Like if there's a technician watching this, they'll say, oh my God, what an idiot this guy is. An inverse head and shoulders or whatever off of this line will bring only about this much or whatever. So I use the profile of the actual chart of prior history, because my thesis is whoever fought over it here, if this was a point of contention in the last few weeks, then they're going to come out and fight it out again. Case in point, look left from the point here, which is the current price, 1860. You can't draw the lines more perfectly than this. At that time, there was a tight move, tight price action. So the price action went from being this wide to this wide and then to a pinpoint. I drew these greens. I said, there's a move coming. I don't know which way. One will start up and one will start down. So, watch the move, put the alerts, and trade. I would trade according to whatever book I have going. Up was the deal then on the 9th. And then now, was this the Shopify related spike? I think Shopify is now allowed, people are now allowed to sell pot on Shopify or something like that. Anyway, here we are back to that pop. So they gave it all back in a matter of a few days, weeks. So this was the 9th, and here we are at the end of the month, weeks. It would make sense that if they fade, that whoever started here say, you know what, last time I bought it here, I made money. I sold somewhere around here. Maybe I should reload. So in theory, this should be support for CGC. It doesn't mean that I pile in long. It means that if I haven't sold yet, this is not the time to sell out. If I'm looking for short-term triggers, I would probably go into maybe finer point timeframes and put an alert down below here. Not sure. It all depends on personal preference. I can tell you if it gets back to 1880, it'll be a selling point for me on a short-term basis as a trader, not an investor. This was a level where they tried to hold the floor eyeball, hence this candle here and this tail that pierced it, but then it was a ledge. So when they come back to it, for the same reason the other one was, I speculate is going to be support, the one over there, this squeeze. This should be some sort of a resistance unless there's a headline that pierces it up. So one level at a time. I don't want to overstep because I really don't know what's going on. This all is nothing to do with the fundamentals. If somebody loves the stock for whatever it is in the future, then this is meaningless. This conversation here is for the short-term price action. If I'm long, do I get out here as a trade? No, because of this little pinch. There is an empty gap below. If this level is lost, then they'll try to test this bounce level, which is 1760-ish. So if the pinch fails, then 1760-ish would be the next one to hold. If that fails, then we'll talk about if they want to erase that big candle from November 11th. to fill the gap all the way down to 15 and change. But there should be no reason for that, because this sell-off from the earnings that it had and the other earnings that came about at the same time, it was pretty severe and pretty violent. So maybe they shook everybody out like last Christmas. So this is where I wouldn't panic out yet. I wouldn't say yet, but if I'm not out yet from a trader perspective, I would want to wait another candle or two to see what the heck happens. So what am I at? 2-hour candles. So it all depends on trader speed. So this is just CGC. Let me see if I have time to do ACB. So Aurora is in worse shape as far as trend is concerned relative to its, a descending wedge like this. It's $1.90. Let's call it a $2 stock. It's at the lower level of the target of the ledge that last lost that I drew. So how low can it go? It can go as low as it had been before. There's a huge consolidation period zone from the periods before 2017 or during 2017. So really homework is more needed in order to see, okay, wait, where's the value for the stock? Or more to the case, is it going to survive? I'm not saying it's not. I'm just saying that if I want to buy it here, I'm betting on the long term. So maybe, just maybe, if I want to contribute to be on the bandwagon of, okay, pot stocks are going to do well in the future, maybe I'll buy a leap at $2 or $2.50 or $3. Probably costs 20-30 cents. I haven't looked, but you can look and see. And what's a leap? It's a long dated call. So instead of spending $2 a share and risking $2 a share, I mean, it sounds low, but it's still $2 a share. If I lose, I mean, I can lose just as much money, if not more, because it seems small and risk-free, but it's not. It's still, I can lose all my money invested in it. So buying calls, sure, time's on the clock and works against me, but at least I'm risking pennies versus dollars. And I'm still long it. I reserve, what's a call? Okay, we're jumping into lesson now. A call option is reserving the right to buy it at a certain level. So, hey, I want to buy it, but only if it takes out a certain level. And I don't want to spend $2 now, but I'll spend 30 or 40 cents to reserve the right to buy it at that level. So if I choose $2.50 to be that level, if there's a call out there, I'll say, okay, here's 30 cents a share. I mean, a contract. Each contract is 100 shares. If it gets above there, I lock in my price at $2.50. So yeah, I miss out but 50 cents, but at least I didn't risk $2 to do it. I only risked 30 cents or 40 cents. I'm quoting numbers from my head. I haven't looked lately, so I'm just estimating. But the concept is there. So that's ACB. Let's do Cronos. Okay, Cronos has they're testing a level at 660, let's call it, that it needs to hold, otherwise it may falter into a couple of tests lower. But for the same reasons that they shouldn't get there, because they just got shook out on earnings hard. So maybe they shook out all of the weak hands, and from here it's going to take a lot more bad news. Speculating, but I can tell you one thing: I'm going to draw it while I'm on camera while I'm being recorded. So the price action is tight, and a move is coming. In which direction? I have no clue. I can just tell you that the price action is getting tighter and tighter, and a move. I drew it lopsided. Okay, never mind. So I drew it lopsided. In fact, I'm going to just do this. Use old so I don't clutter the things. So energy collects when lower highs, higher lows are coming to meet into a zone that has been contentious. How do I know it's contentious? That orange line is the actual point of control. So this is where bulls and buyers and sellers, because bulls can also sell sometimes to profit. Buyers and sellers have been most active. Look left. That long candle tells me that all this action down here, the volume, if you throw it on the price axis, which is on the right-hand side here, it gets busiest right here. So it's a sticky zone. So on the way up, it's going to be resistance. On the way down, it's going to be support. Therefore, it's just sticky. So everything is collecting to a point. Something is going to happen. Boom. You pick your poison there. All right, that's enough. I wanted to make a short video on that. But the original statement was for CGC. Canopy is that, okay, the alert came out last week. Now they're in the process of pricing it. If I'm not out yet from up here, from 20 or whatever, then I would wait out a few candles because the zone should be support from this consolidation period right here. Maybe I'll draw a little box around it like this. All right, next, signing out.